Hello and welcome to 3.0 TV. I am Vishakha Thakur. Institutional interest in crypto is rising, especially after the launch of spot Bitcoin ETFs. While fund flows are shifting, investor profiles are evolving, and the global narrative around digital assets is changing. So to break it all down, I am joined by a special guest who has been tracking these trends closely and has led the institutional conversation on crypto adoption backed by data and research and on-ground experience. Mr. James Butterfill, Head of Research at CoinShares, the Nasdaq Stockholm-listed leading European alternative asset manager specializing in digital assets. So with nearly 2 decades of experience in investment strategy, Mr. James is helping institutions navigate and allocate in this space. So welcome to 3.0 TV, Mr. James.
Pleasure to meet you, and thank you for having me.
So it's a great pleasure to have you with us today, sir. So to begin with, the appetite for digital assets is increasing as bulk of investments are happening in Bitcoin ETFs. So what are the factors contributing to this broad-based adoption amongst institutions, corporates, and retail?
I think those factors have changed over time, or perhaps better phrase is evolved. Over the last, say, 3 or 4 years, we've gone from quantitative easing to quantitative tightening. And so that's restricting interest rates, particularly in the United States and Europe. And that's led to a lot of kind of problems in the economies. Constricting of credit can cause problems with economic growth, etc. And it leads to these unintended consequences and uncertainty. So in March 2023 in the United States, we saw a couple of banks collapse because of tightening interest rates. And that led to investors looking for alternate assets that diversify and that I suppose a kind of insurance policy against errant monetary policy.
Right.
And Bitcoin really fits in that category. And I think that is now becoming the core reason why investors are buying it. You know, speculation is not one of the core reasons at all. It's about diversification. It's about this monetary policy hedge.
So that's true, but don't you think there should be more balance in investment rather than allocating only a single coin in the portfolio?
Yeah, I think what many investors are struggling with at the moment is just getting a handle on Bitcoin alone. It is a complex thing. At CoinShares, we have to spend, we never have one meeting with a client and they decide to buy. It's multiple meetings, maybe over the course of 6 months or a year. And it takes a long time for them to get used to understanding and therefore investing in Bitcoin. To then move on to other coins such as Ethereum or Solana, they're quite different to other assets. I'd say Bitcoin definitely can be classed as a non-sovereign store of value. And that is quite different to something like Ethereum, which is a bit like Amazon Web Services, but with a currency rolled into it. Much more like a tech stock. So very, very different assets. And so I think initially, it definitely, as I mentioned earlier, about it being a monetary policy hedge, I think only really Bitcoin fits as that. Whereas all the other coins are more like investing in a tech stock and understanding those. And many of those other coins are still not in a place where they are profitable or have enough users to make them a viable investment. And so I think that's why investors are sticking very much with Bitcoin and then slowly venturing into other coins, particularly Ethereum is the main one at the moment.
Right. So at CoinShares, what are your current product offerings, if I may ask, and which other products do you intend to launch going forward?
Yeah, I mean, we have 15 different products.
Wow.
So all the sort of top coins you can think of, such as Tron, Ethereum, Solana, Bitcoin, a whole range of them. But, if I'm honest, in terms of the total assets under management, 95% is in Ethereum and Bitcoin, and the other 5% is in other altcoins. And so we have to think commercially, is it viable to consider adding more to that list when there isn't that appetite yet amongst investors. Whereas it's important to point out here that the majority of our investors are institutional investors, wealth managers, and so the majority of them are nowhere near to looking at this vast range of 15,000 other altcoins.
Wow.
So we have to commercially think about it. But to answer your question about what other coins we're looking at, we're starting to look at layer 2 solutions. So these are coins or tokens that operate on top of an existing chain. So a layer 1 solution would be something like Bitcoin or Ethereum, and a layer 2 solution for Bitcoin would be Lightning, and for Ethereum it might be something like Arbitrum or Optimism or Base. And there's one particular one we're looking at with great interest at the moment, which is Hyperledger. We think that has really interesting prospects. So that's one of the products we're considering adding to the list.
Wow, thank you for sharing that information. But when it comes to investment strategies, how do you allocate assets in your client's portfolio?
Yeah, I mean, so obviously it's down to each client. We can't force them. I used to be an investment manager. And so a lot of it is around sort of Bitcoin specifically and understanding what position it has in the portfolio, how it operates within the economic cycle, how large the positioning should be. And that's the big one. And that very much depends on the investor's appetite for risk. So if you had a balanced portfolio, so 60% equities, 40% bonds, and you added a 4% position of Bitcoin, that would add an additional 100 basis points of risk. Now, for some, that might be too much. So say a 2% position would add 40 basis points of additional risk. And if you wanted to go higher, in fact, there's kind of the technical sort of efficient frontier is around 10% Bitcoin position. And that's when, if you add any more than that, it starts, the improvements in the risk-adjusted returns are less and less. And so generally anywhere from 0 to 10% is prudent. But what we're finding with our clients at the moment is they're adding anywhere between 1 to 2%. So they're really sort of dipping their toes into the market and being quite cautious.
All right. So you've already shared about the coins which you are planning to add in the portfolios. But in the current fiscal, what kind of fund flow or AUM do you expect and why?
Yeah, well, I mean, last year was incredible. We saw $48 billion of inflows into digital assets globally. And in the United States alone, since the ETFs were launched, they've seen $67 billion worth of inflows. So incredibly popular. I mean, to put that in perspective, when iShares launched their gold fund around 20 years ago, the gold ETF, it saw $300 million of inflows in the first year.
Wow.
And in fact, it's taken 20 years for gold ETFs to reach the level of inflows that it took just 1 year for Bitcoin ETFs. So it's been an incredibly successful story for ETFs issuers in the United States. Absolutely. And if we think about how much could that rise by next year? So this year so far, so we've just seen the past quarter, we've seen $11.9 billion of inflows so far this year. So just over a quarter of what we saw last year. So it looks like we're on set for around maybe $50–60 billion of inflows this year. And I think what's really helping this is the United States setting up a strategic reserve asset in Bitcoin. This just gives Bitcoin a whole new realm of credibility. Many of our clients really struggled with the credibility side and the risk of overregulation. And now that regulators are regulating and governments are adding to positions, there's a lot more confidence amongst investors to our positions. The negative stigma of adding Bitcoin and the risk of ridicule amongst their clients, I think, is really falling away now.
Wow, definitely. In fact, the comparison with gold ETFs is worth watching. And as you mentioned that more and more governments, corporates are adopting Bitcoin. So apart from institutions, what percentage of HNIs, family offices are investing in digital assets and why?
Yeah, so it's the best. The thing about ETFs generally are they're anonymous, but in the United States we get a bit of an insight into this. So they issue something called 13F filing. So any fund over $100 million has to issue their positions in their portfolios every quarter, and so we've just had the data come in, and the vast majority, there's different segments of investors, so institutional, advisors, banks, a whole range of different investors, wealth managers, etc. And what we find is, and hedge funds, and what we find is it's the advisory section where the largest positioning is now around 50% of the inflows into US ETFs are advisory. Wow. And then hedge funds have around another 30%. They've actually been paring down their weights recently because they've been taking profits. But all other sectors we can see, such as retail, by the way, that's sort of kind of retail advisory sector, that's the same thing. Individual high net worth people, that's all within that bucket. But banks are increasing allocations. Institutional investors are increasing allocations too. So it's incredibly encouraging so far.
So you mentioned that 50% is advisory and 30% are the wealth managers. So why the 50%, this much percentage by advisory? What are the reasons behind it?
Yeah, this is very much, I think, a legacy thing. I mean, what's been unusual about Bitcoin is that generally it's, or other assets when they first come along, it's generally the institutions that buy them first. But for Bitcoin, it's the other way around. This has been very much a retail-led investment rather than an institutional-led one. And that's why I think a lot of the client demand has been from retail and advisory and non-institutional at this point. So I do think that will slowly change over time. I mean, CoinShares, if you looked at our total assets under management, say 3 years ago, it was 90% retail, so advisory, and only 10% institutional. Now that's really changed. It's around 60% retail and 40% institutional. So that we're seeing a lot greater participation.
Wow, 60% retail and 40% institutions. So now coming to countries adopting Bitcoin, offering products, now India has overtaken Japan to be the fourth largest economy in the world, with India gaining preference over China in terms of manufacturing or with improving micro and macroeconomic indicators. India is gaining preference over the rest of the world in terms of investments, as no one would want to miss the India story. So what are your plans for the Indian market? Are you considering expanding your footprints to India?
None as yet, but I do think things would change. I mean, the mindset of Asia in investing and the mindset of Europe and America is quite different. I do think there's a much greater sort of trading mentality in Asia. And also, perhaps due to regulation, it's much easier to add digital assets into your sort of wealth portfolio than it is in Europe. There's a lot more regulation in Europe where you couldn't just buy Bitcoin from Coinbase and add it to your pension, for instance.
Right.
And so it has to be in a regulated structure, and that's why ETFs have been so popular in Europe and the United States. And also, people tend to stock pick a bit more in Asia. I do think there is room for the Asian market and ETFs. We've just not seen that same success. I mean, we do have an ETF in Japan, for instance, that's been very successful. But any company, I think, or ETF issuer moving into a new country, it's a whole new distribution effort. I mean, India is an absolutely massive country, and it would require huge investment from us to consider India. I think there is potentially a huge opportunity as well, because the great thing about ETFs and Bitcoin is it provides perhaps one of the most secure ways of owning Bitcoin and one of the easiest ways to transact it. But it's not something we're considering at the moment, unfortunately.
All right. So would you like to expand your footprint in other geographical locations as well? And currently, in which all countries are you available? And if yes, which are your target countries and why?
Yeah, I think so we're well established in the United States now. We acquired Valkyrie in the United States, and obviously in Europe. And I think the next step, we're sort of going more and more east. So the Middle East, so Qatar, Abu Dhabi, Dubai, the next, and Bahrain are the next kind of areas on our sort of targets, really, in terms of sales efforts. So yeah, slowly, I think, and then after that, we'd probably consider somewhere like India.
All right. Now, in terms of sectors such as AI, blockchain, meme coins, which sector or segment of crypto do you think will grow in the coming future?
Yeah, I mean that's a complicated one. I suppose crypto and AI are seen as a similar sort of thing. They are quite separate, although they are linked. So what we're seeing in Bitcoin mining, for instance, is a lot of miners now switch to AI, and we're one of the largest investors in Bitcoin mining companies globally. We have around $400 or $500 million of assets under management in Bitcoin mining companies. And what we're finding just by accident is that we're now becoming investors in AI because all these mining companies are setting up AI operations too.
Definitely.
That's a really hot space at the moment. And also, we're starting to invest quite heavily into companies that are buying Bitcoin on balance sheet. So Bitcoin treasury investments, we call it, or Bitcoin yielding companies. So MicroStrategy is the most well-known one, a tech company that's bought an awful lot of Bitcoin. And there's increasingly more companies doing this. So GameStop is the most recent one. It tends to be very flattering for share prices.
Correct.
So we're increasingly doing that. And companies in that space are doing it for varied reasons, but generally it's because they're concerned about the weakness of the dollar and monetary policy.
All right. So what is your goal for real-world asset tokenization, and which asset class are you considering for RWAs? And do you think fractionalization will increase the depth of the market?
Yeah, I mean, real-world assets is a real buzzword at the moment. We are into it to some extent. So it's primarily gold. We have a few gold real-world assets. So people on-chain can buy gold, physical gold. That's as far as we've gone so far. BlackRock is perhaps the one that's most advanced in this space,
Yes,
issuing bonds online. But what you've got to remember is real-world assets, they only really appeal to people who are currently on-chain. They have perhaps made their wealth on-chain. They want to keep their wealth on-chain, but they want to buy real-world assets. So we're almost the other way around. We're just providing access channels from the real world to on-chain rather than the other way around. And I think that's probably where we'll stay for now.
All right. So, Mr. James, you have predicted that Bitcoin will cross $150,000 by year end. Do you still stick to this prediction? And based on your research, what are your price predictions for other prominent altcoins?
Yeah, I mean, I think people might have said I was crazy saying that price prediction. But look how much the price has risen recently. And I think it's better to kind of do a simple valuation of Bitcoin, and perhaps, to understand that Bitcoin is a form of money competing with other forms of money. Bitcoin is slowly taking market share from other forms of money. So gold being the most interesting one. And at current Bitcoin prices, it represents around 10% of gold's market share. And so I don't think it's unreasonable for it to represent 15%, 20% of gold's market share. So 15% would represent a Bitcoin price of gold's market share would represent a Bitcoin price of 150,000. So I think in that context, it's actually quite a modest assumption that it could achieve that. I mean, the timing of that is always very tricky, but it now seems increasingly realistic, particularly with the Fed, which is likely to cut monetary policy further in the latter part of this year. I expect that it could be very supportive for Bitcoin.
All right. And what about other altcoins? Do you have any price predictions for other altcoins like Ethereum, Solana, XRP?
Solana is the only other one. I mean, we think it could easily reach 4,500, so close to prior peaks. That's based on the assumption that various things on chain changed. So they've recently had a successful upgrade. It's just kind of like a software upgrade called Pectra. And that's been very successful. And also, if we look at on-chain revenues that Ethereum's growing, now they've had a bit of a problem with on-chain revenues because a lot of the layer 2 solutions that sit on top of Ethereum, such as Arbitrum and Optimism and Base, are stealing revenues from Ethereum. But recent upgrades and recent changes to various different software rollouts called EIPs suggest it's quite achievable, I think, in the next few years.
That's great. But when we compare Bitcoin ETF flows and Ethereum ETF flows have not attracted a significant amount of inflows when compared to Bitcoin ETFs. What do you think is the reason behind it? And do you think if staking ETFs are approved, this will be a game changer for Ethereum or Ethereum ETFs as well?
Well, they're roughly proportional. If you look at the market cap of Bitcoin and the market cap of Ethereum, if you look at the flows, they're roughly the same sort of ratios, the same proportions. And in fact, Ethereum has, but over the last 2 years, Ethereum's really suffered from negative sentiment because people were very worried about various different upgrades that have occurred. And now that worry seems to be over. We're now on our 6th consecutive week of inflows. Year to date, Bitcoin's seen around $10 billion of inflows. Ethereum's seen around $1 billion of inflows. Right. So sentiment's really improving. But yeah, I think the missing link, CoinShares offers staked Ethereum in Europe. So those ETFs are available in Europe. They're just not available in the United States. With the way the 40 Act ETF structures work, you can't do that. Now, people are including us, are thinking about imaginative ways you can make that work, but there's nothing approved by the SEC just yet. But yeah, it seems very nonsensical to own Ethereum, which is offering, without the offering of a 5% yield, staking yield. So I think that will come over time, but it's tricky to tell exactly when the regulators in the US are going to be comfortable with that.
All right. So can you share any surprising trends from CoinShares' latest fund manager surveys or flow data?
Yeah, I mean, the fund manager survey that we do every quarter, I mean, the most interesting thing is, I mean, everyone criticizes Bitcoin and says, oh, people are just buying it for speculative reasons. In fact, they're not. The main reason is diversification. And another big reason is people want access to the distributed ledger tech. So that's one of the, and it's actually, speculation is, I think, 3rd or 4th on the list now. So it's right down. So that goes quite against, I think, what many people believe in terms of speculation is the primary reason for owning it. In terms of fund flows, recently we've seen XRP that had 80 consecutive weeks of inflows. It's the last 2 weeks we've seen outflows there. So, you know, we struggle to develop a fundamental investment story for XRP and Ripple, if we're honest. And so it doesn't surprise me we're starting to see some outflows there. And the one laggard recently has been Solana. Solana's been this darling of investors over the last couple of years, but it seems like Ethereum is starting to sort of take precedence from investors against Solana.
All right. Thank you so much for sharing all the insights. And it was wonderful having you on the show, sir.
My pleasure. Thank you for having me.
Thank you, sir.